Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze Broadcom stock. Specifically, I will talk about whether Broadcom is one of the best AI stocks after Nvidia. I will talk about whether Broadcom stock is undervalued now. Before I start, I'd like to give you some context first. At the time of making this video, the market is in a large correction again. There are several reasons. The US inflation is still too high and is not coming down toward the 2% inflation target yet. The US Fed initially forecasted to have 3 rate cuts starting in June this year if inflation is coming down to the 2% target. Now the Fed may not even cut rates this year. Instead, the Fed will likely hold higher rates for longer. When inflation is still higher than expected and the Fed is holding higher rates for longer, this impacts US stocks a lot, especially tech stocks. Also, the increasing tensions and the ongoing wars in the Middle East are affecting the US stock market a lot. As of now, you can see that the market is very fearful again. Just a few weeks ago, the market was extremely greedy. Most stocks were overvalued. Now, I believe many stocks, especially tech stocks, are becoming undervalued now. For example, if you check the Nasdaq 100 QQQ ETF here, you can see that this large drop is almost as deep as the large dip from a few months ago. Also, you can see that the Nasdaq 100 QQQ ETF is almost back to where it was earlier this year. So the market is essentially back to where it was earlier this year. This suggests that many large tech stocks are likely becoming fairly valued or even undervalued now. Also, if you look at Broadcom, you can see that this large dip here mostly because of the macro headwinds that are affecting the entire market now. So in this video, I'm going to talk about whether Broadcom stock is one of the best AI stocks after Nvidia. I will cover these topics in this video. First, I will give you a quick stock portfolio update. Then I will talk about Broadcom's biggest risk going forward, Broadcom's long-term growth prospects, Broadcom stock valuation, and will I buy Broadcom stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos a week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. If you have been following my channel, you will know that I often show you this portfolio to explain my investing strategies over time. Recently, I had to change to a different broker because my previous broker was acquired by another bank. Now, my portfolio here is separated into 3 different accounts. I'll show you each of these 3 accounts to explain my investing strategies over time. This is the first account. There are many multi-baggers here because I bought most of them when they were much more undervalued before. More importantly, I've picked the best companies that are the best in their industries. They have the largest economic moats, great management teams, great long-term prospects, increasing earnings, and increasing free cash flows over time. For example, I have invested in MasterCard, Microsoft, Visa, Amazon, Google, Meta, Amex, TSMC, and ASML. This is my second account. I use the same investing strategy here. It's a concentrated portfolio. My long-term investing strategy is to keep investing in the best businesses that are undervalued. For example, you can see that I have invested in Apple, Google, Visa, Microsoft, Adobe, American Express, TSMC, Amazon, ASML, and Tesla here. Right before making this video, I sold my remaining AMD shares and made a 57% gain. Then I reinvested the money in Nvidia. Overall, this account is doing very well even though the market is in a correction now. This is my third account. This is a fairly new account. I started it around 3 years ago. This is the only one that is a margin account. I've been using this account to buy more undervalued stocks since the large correction in 2022. When this account doubles over the next 2 to 3 years, I will likely sell some of these companies to pay off the margin. I did make several mistakes in this account. My first mistake is this: I diversified too much and bought too many companies in this account. For example, I have Microsoft, ASML, Intuit Inc., MasterCard, Amex, Visa, Nvidia, Amazon, TSMC, Google, Synopsys, Meta, Apple, Adobe, MSCI Inc., and Tesla in this account. Right before making this video, I started a very small position in Broadcom. Almost all these companies are outstanding businesses that have large economic moats, great management teams, great long-term prospects, increasing earnings, and increasing free cash flows over time. But if I could choose again, I would just concentrate on the top 10 companies instead of having over 15 stocks in this account. My second biggest mistake is buying too many Tesla shares in this account. In hindsight, I shouldn't overweight Tesla because Tesla is facing a lot of competition now, and Tesla is continually cutting prices to increase EV demand. Right now, I'm waiting for Tesla to recover. Once Tesla reaches close to 1 trillion in market value again, I will likely sell 50% or even 100% of my Tesla shares. At the time of making this video, the market is down a lot. I'm not too worried about it because I have invested in many outstanding companies that are the best in their industries. I bought most of them when they were much more undervalued before. So once the market recovers and reaches new highs, I expect these companies will make very large gains. Then I will likely sell some of these companies to capture the gains. Let's go back to Broadcom. I think it's very important to understand Broadcom's business model and its biggest risk first. So what is Broadcom? Broadcom is one of the largest semiconductor companies in the world that specializes in making semiconductor network devices and infrastructure software solutions. Broadcom makes thousands of semiconductor products such as data center switch and routers, PCIe switch and retimers, set-top boxes, cable modems, Ethernet connections and network devices, custom application-specific integrated circuit ASIC AI chips, wireless and Bluetooth chips that are found in smartphones, F-bar filters that are used in iPhones, embedded processors, HDD and SSD controllers, and fiber optic solutions. Other than semiconductor solutions, Broadcom also earns a large percentage of revenues from infrastructure software solutions. As of now, VMware is a part of Broadcom. This is a major shift to Broadcom's strategy because Broadcom is not just a semiconductor networking company that offers networking, server storage, broadband, wireless, and industrial solutions. Broadcom is also an infrastructure software company that earns a large amount of software and subscription revenues from these services here. For example, if you check Broadcom's most recent earnings report, you can see its infrastructure software business contributes a large percentage of operating income now. Software revenues will continue to be very important to Broadcom going forward because software revenues are much more consistent and stable. A large part of this infrastructure software revenue is recurring revenue. The semiconductor industry is by nature very cyclical. The semiconductor industry often goes through many boom and bust cycles. This is why Broadcom has been investing heavily in infrastructure software businesses in recent years. For example, Broadcom paid more than $69 billion to buy out VMware a few months ago. This large growth in infrastructure software revenue is mainly from buying out VMware. In terms of financials, you can see Broadcom has had very consistent revenue growth, operating income growth, and free cash flow growth over the past 10 years. But this is not the full story. We also need to look at Broadcom's debt level and shares outstanding. Broadcom has a very long history of buying out different semiconductor companies and software companies by issuing more shares and issuing more debts. For example, Broadcom had to pay more than $69 billion to buy out VMware in late 2023. The biggest issue is this. This VMware acquisition was not cheap at all. Broadcom had to pay a huge premium to acquire VMware. Broadcom had to issue $30 billion of debt, assume more than $8 billion of net debt from VMware, and issue more shares to acquire VMware. At the time of making this video, Broadcom's debt to EBITDA ratio is at around 3.81. This is much higher than before. Broadcom's debt to EBITDA ratio was at around 2 before acquiring VMware. Going forward, Broadcom will need to pay down its debts over the next several years to bring its debt to the EBITDA ratio close to 2 again. At the time of making this video, Broadcom has much more debt than cash. Broadcom has around $11.86 billion in cash equivalents and nearly $76 billion in total debt. The net cash is negative $64 billion. Again, Broadcom's debt to EBITDA ratio is at 3.81 and its debt to free cash flow ratio is at 4.13. In my opinion, both debt ratios are quite high. I think Broadcom will prioritize paying down its debts over the next several years. This means Broadcom will likely need to slow down its stock repurchase program and dividend growth over the next several years. Here's the second biggest risk we should consider. Broadcom has several major customers that contribute the most revenues to the company each year. For example, in the most recent quarter, Broadcom's top 5 customers accounted for approximately 40% of the company's total revenues. Apple is one of Broadcom's biggest customers. In fact, Apple accounted for approximately 70% of Broadcom's total revenues in the most recent quarter. Here's the biggest risk for Broadcom. Based on what I know, Apple buys billions worth of mobile networking components such as FBAR filters, 5G radio frequency chips, Bluetooth and Wi-Fi chips, and other wireless components from Broadcom each year. Apple uses Broadcom's networking chips in iPhones. Apple tried to develop its own in-house wireless chips before, but it turned out to be much harder than expected. So Apple had to renegotiate with Broadcom and use Broadcom's wireless chips such as Broadcom's FBAR filters. Apple may try to replace Broadcom's wireless chips later on again, because Apple is always looking for ways to cut iPhone's component cost. Let's talk about Broadcom's long-term growth prospects here. I will explain why I think Broadcom is one of the best AI stocks after Nvidia. Broadcom has a very long history of acquiring other companies, cutting costs after buying out other companies, making each company run more efficiently, growing each company organically, and expanding to other markets that will have the biggest growth opportunities over the next 10 years. For example, before 2016, Broadcom was very focused on buying semiconductor companies. After 2016, Broadcom has been acquiring more enterprise software companies because Broadcom wants to have more software revenues that are more recurrent and subscription-based. This is why Broadcom acquired VMware for more than $69 billion in late 2023. This is a huge bet for Broadcom. This is Broadcom's growth strategy. It has worked very well for Broadcom for many years. Broadcom calls it a sustainable franchise. Here's how it works. There are 3 pillars. First, Broadcom identifies the markets that are durable and asks, where will these markets be in 10 years from now? Second, Broadcom focuses on markets and businesses where the company can achieve technology leadership. This is the most important pillar for Broadcom because Broadcom only wants to invest in businesses that are durable and have great long-term prospects over the next 10 years. And Broadcom is aiming to achieve technology leadership in all the markets the company invests in. For example, networking and wireless are Broadcom's 2 most important businesses. They contribute the most semiconductor revenues to Broadcom each year. Broadcom is a market leader in these 2 businesses, so Broadcom's goal is to maintain technology leadership in the most important franchises or businesses such as networking and wireless. And the third is execution. I said this earlier, Broadcom is shifting its strategy to buy more enterprise software companies, achieve technology leadership in each market, make each business run more efficiently after buying them, grow them organically, and generate more recurring software revenues. I believe infrastructure software will be one of Broadcom's biggest growth opportunities going forward. Here's an example. As of now, Broadcom expects that VMware's revenue will increase by double digits this year. One of the biggest reasons is that VMware is no longer supporting perpetual licenses. Instead, Broadcom is forcing most VMware customers to move to subscription-based bundle services. This will likely generate much more consistent revenue growth for VMware and Broadcom in the long run. But the downside is that VMware will likely lose many small customers who bought perpetual licenses. Based on what I know, VMware subscription-based bundle services are generally much more expensive than perpetual licenses. Broadcom's management said this during the most recent earnings call. We expect continued strong bookings at VMware will accelerate revenue growth through the rest of fiscal 2024. Revenue from VMware will grow double-digit percentage sequentially quarter over quarter and through the rest of the fiscal year. This is simply a result of our strategy with VMware. We're focused on upselling customers, particularly those who are already running their compute workloads with vSphere virtualization tools to upgrade to VMware Cloud Foundation, otherwise branded as VCF. VCF is the complete software stack integrating compute, storage, and networking that virtualizes and modernizes our customers' data centers. This on-premise self-service cloud platform provides our customers a complement and an alternative to public cloud. And reflecting all these factors for the full year, we reiterate our fiscal 2024 guidance for software revenue of $20 billion. Broadcom also gave us this full year guidance for fiscal 2024. Turning to fiscal 2024, we reiterate our guidance for semiconductor solutions revenue to be up mid to high single-digit percentage year on year. I know we told you in December. Our revenue from AI will be 25% of our full year semiconductor revenue. We now expect revenue from AI to be much stronger, representing some 35% of semiconductor revenue at over $10 billion. And this more than offsets weaker than expected demand in broadband and service storage. So for fiscal 2024, in summary, we reiterate our guidance for consolidated revenue to be 50 billion, which represents 40% year-on-year growth, and we reiterate our full-year adjusted EBITDA guidance of 60%. Here's the important part you should know. First, infrastructure software will likely contribute about 40% of Broadcom's total revenues going forward because of VMware's virtualization software and cloud services. Second, within Broadcom Semiconductor Solutions, its networking business, which includes custom AI chips, will be the biggest growth driver going forward. At the time of making this video, Broadcom server storage, broadband, wireless, and industrial businesses are facing very weak demand right now. Their revenues are expected to decline year over year in fiscal 2024. Broadcom's management expects that server storage, broadband, wireless, and industrial businesses will not recover until at least the second half of 2024. So Broadcom's networking business is driving most of the semiconductor growth because of the very large demand for AI networking devices and custom AI chips. I believe this trend will continue for the next several years because there's a very large demand for AI data centers that are needed to train and infer the most advanced large language models. Let me explain more here. According to Broadcom, Ethernet is the de facto AI network. Broadcom is one of the largest networking companies in the world that makes thousands of networking chips and devices, switches, Ethernet network interface cards, and custom ASIC AI chips for data center customers. Most data center customers such as Amazon, Google, Meta, Oracle, and Alibaba buy a lot of networking chips, switches, and devices from Broadcom every year. Whenever these tech companies need to build their AI data centers and expand their AI networks, they need to invest billions in the most advanced networking devices and switches in order to connect thousands of AI GPUs and servers together. Broadcom is the market leader in the networking industry. As of now, Ethernet and Nvidia's proprietary InfiniBand are the two most prominent networking technologies. Ethernet is much cheaper than Nvidia's InfiniBand and is widely used in most data centers around the world. Ethernet is widely compatible with most networking devices and servers. This is why Broadcom calls Ethernet the de facto AI network. But Nvidia's proprietary InfiniBand is much better for high-performance computing HPC applications and very intensive AI workloads because InfiniBand is faster and more reliable. Nvidia's InfiniBand has much lower latency than Ethernet. The downside is that Nvidia's InfiniBand is much more expensive than Ethernet. So for companies that don't want to invest in Nvidia's InfiniBand, which is very expensive, many data center customers will invest in Broadcom's Ethernet networking devices, which are generally much cheaper than InfiniBand. I think this trend will continue to benefit Broadcom because the demand for AI GPUs and AI data centers will likely continue to grow for many years. This is from Broadcom's most recent AI conference. In a typical AI server, you see all these devices connected to each other. Broadcom doesn't make the data center CPU. The data center CPU is usually made by Intel or AMD. Broadcom mainly supplies the network interface card, the PCIe switch, and this network switch here. Broadcom also makes custom XPU AI processors for data center customers such as Google and Meta. This is my prediction. Going forward, I believe the hyperscale cloud providers such as Amazon, Google, Microsoft, and Oracle will continue to build and scale out their AI data centers for many years. The largest tech companies such as Meta, Tesla, and ByteDance will also continue to scale out their AI data centers. If they don't invest in more AI data centers now and build their AI models, they will be left behind by other competitors. This means the demand for AI networking devices and custom AI chips will likely continue to increase a lot over time. So this trend should benefit Broadcom's networking business over the long term. I believe Broadcom's custom chip business will be the company's biggest growth driver going forward. There are several reasons. First, very few companies have the expertise and technologies to make custom AI chips for other companies. Based on what I know, Broadcom is the market leader in making custom AI chips. Nvidia is also planning to make custom AI chips for customers. Second, there's an enormous demand for the most advanced large language models and AI models. All these AI models need to use thousands of AI GPUs that consume a lot of energy. So Broadcom's customers such as Google and Meta are looking for custom AI accelerators that are much cheaper and more energy efficient than Nvidia's AI GPUs. Third, Nvidia is a near monopoly in the AI GPU market and it owns around 90% of the market. Nvidia's AI GPUs are insanely expensive. For example, Nvidia's latest Blackwell AI GPU can cost between $30,000 and $40,000 each. You need thousands of Nvidia's AI GPUs to train and infer AI models, so it's very expensive to buy AI GPUs from Nvidia. It costs billions to build an AI data center. This is why the largest tech companies such as Amazon, Google, Microsoft, and Meta are developing their own in-house AI chips for specific workloads because they don't want to rely on Nvidia completely. They can save billions each year if they use their own in-house AI chips for certain AI workloads instead of buying AI GPUs from Nvidia. So all these trends will likely benefit Broadcom going forward because Broadcom is the market leader in making custom AI chips, specifically ASIC chips for certain workloads. Broadcom recently updated its guidance. It shows that Broadcom will likely earn more revenues from making custom AI accelerators going forward. Based on this guidance, Broadcom expects that its AI revenue will reach 10 billion plus in fiscal 2024. Broadcom also expects that its AI revenue will be around 35% of the company's semiconductor solutions revenue in fiscal 2024. This is much higher than in previous years. I believe this trend will continue as long as there's a very large demand for AI applications, AI data centers, and AI accelerators. Google and Meta are Broadcom's two biggest customers in the custom chip business. Recently, Broadcom added another major AI consumer company. Similar to Google and Meta's arrangements, Broadcom will likely co-develop custom AI accelerators with a third customer. I believe this will bring billions of additional revenues to Broadcom going forward. According to this article, the company Broadcom anticipates achieving total AI semiconductor shipments of 10 to 12 billion this year, driven by the expected increase in demand from its third AI IC customer, likely ByteDance's TikTok, and strong market interest in Broadcom's Tomahawk 5 and Jericho 3 switching and routing chipsets, as well as its PCIe Gen 5 and Gen 6 switching solutions. This projection signifies a growth of 2.5x compared to the figures recorded in 2023. Overall, Broadcom's asset design win and revenue pipeline remains robust, bolstered by strong AI-driven demand in the networking semiconductor market, with anticipated positive revenue and EPS revisions throughout the year. Broadcom positions itself for continued success and growth in the AI semiconductor industry. I want to show you this consensus revenue forecast from Second Alpha. First, Broadcom's revenue growth is expected to grow over 40% year over year and reach 50 billion in fiscal 2024. Broadcom's management also guided 50 billion in revenue in fiscal 2024. This large revenue growth is mainly from buying out VMware in late 2023. This means Broadcom's revenue growth will be much lower and more reasonable starting in fiscal 2025. Historically, Broadcom's revenue grew at a compound annual growth rate CAGR of 12.77% each year over the past 5 years. If I have to make an educated guess, I believe Broadcom's revenue should grow by around 8% to 12% each year over the next several years. Broadcom is much larger than before, so we shouldn't expect Broadcom to have the same high revenue growth rates as before. In terms of EPS forecast, Broadcom's EPS is expected to grow around 12% year over year in fiscal 2024. After that, Broadcom's EPS is expected to grow much faster than its revenue growth over the next several years. Just to compare, Broadcom's EPS grew at a CAGR of 12% over the past 5 years. I want to show you how to calculate Broadcom stock's intrinsic value here, so you will know when Broadcom becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my page or blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Broadcom's intrinsic value as its future free cash flows, discounted to the present day. I use the discount rate of 10% here. You can use a higher discount rate here if you want to be more conservative. Based on management's guidance, I believe Broadcom's value will grow to around 50 billion in fiscal 2024. This includes VMware's revenue. This is my base case scenario. After that, based on the biggest risk and the long-term growth prospects I talked about earlier, I believe Broadcom's revenue will grow at a compound annual growth rate CAGR between 8% and 12% annually over the next several years. I believe these revenue growth forecasts are reasonable because they are slightly lower than the company's past growth rates. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that Broadcom's revenue will reach around 48 billion in fiscal 2024. After that, we're forecasting that Broadcom's revenue will grow at a CAGR of 8% over the next several years. If we forecast Broadcom's free cash flow over the next several years and discount the free cash flow to the present day, Broadcom's intrinsic value should be around 564 billion for the entire company, or $1,147 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that Broadcom's revenue will reach around 50 billion in fiscal 2024. After that, we're forecasting that Broadcom's revenue will grow at a CAGR of 10% over the next several years. then Broadcom's intrinsic value should be around $633 billion for the entire company, or $1,287 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that Broadcom's value will reach around $52 billion in fiscal 2024. After that, we're forecasting that Broadcom's value will grow at a CAGR of 12% over the next several years. Then Broadcom's intrinsic value should be around $708 billion for the entire company, or $1,438 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Broadcom's intrinsic value should be around $1,290 per share. I also used the forced sales valuation model here to estimate Broadcom's intrinsic value, which should be around $594 billion for the entire company, or around $1,207 per share. If we take the average of both valuation models here, I believe Broadcom's intrinsic value should be around $1,248 per share. This means I believe Broadcom is slightly undervalued or fairly valued at the time of making this video. Just to compare, Morningstar gave Broadcom a much lower fair value of $1,090 per share. So will I buy Broadcom stock? Yes, I will likely buy more Broadcom shares going forward if the company is undervalued, well below my intrinsic value estimate. At the time of making this video, I only have a very small position in Broadcom. It's less than 1% in one of my stock portfolios. I believe Broadcom will continue to make more custom ASIC AI chips for Google, Meta, and the third AI customer. I believe Broadcom's networking business will continue to benefit from the very large demand for AI data centers and AI accelerators that are needed to train the most advanced AI models. This is my plan going forward. If the market continues to be very fearful, I will continue buying more AI and semiconductor stocks that are undervalued. I like to be very greedy when others are fearful and fearful when others are very greedy. I expect the market will recover and reach new highs once the US inflation comes down toward the 2% inflation target. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. I think it's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.